for this session on the practice opportunities in customs and foreign trade policy. We have with us an luminary, I can say. We have with us a person with 5 decades of experience in this particular field of practice, and we never could have any better person other than Menon sir for this particular program. And he was gracious enough to accept our invitation and share valuable thoughts on this particular topic, which is of all relevance, because not many people are into the customs and foreign trade practice. However, we chartered accountants day in and day out come across the financial statements of various entities, and we note that there is a lot of foreign expenditure, foreign currency inflows, outflows, and that there is some capital expenditure towards the import of certain goods. In this way, there could be a lot of expenditure and other things that could be there in relation to the foreign exchange, and they may be exporters. And it would be on us to give the value addition to the client by seeing those financials as to how best they could take the benefit of the customs and foreign trade policy incentives that are there. And in this backdrop, we thought it would be a good thing for us to invite a speaker like Menon sir. And I would like to ask my ask my colleague Hema to introduce the speaker of the day and welcome all formally. Thank you.
Thank you, sir. So, dear viewers of this session, good evening all. On behalf of Karnataka State Chartered Accountants Association, I welcome you all to this webinar on the topic of opportunities in customs and foreign trade policy. I welcome today's expert speaker, Sri Menon, to this webinar. Welcome, sir. Attendees are requested to raise your questions in the Q&A tab available. The questions shall be presented to the speaker at the end of the session for views. And participants are requested to ask questions by selecting drop-down option and all panelists. Now I provide a short introduction to the speaker. N.N. Menon is an MBA holder from Andhra University and worked for Bharat Heavy Plate and Vessels Vizag, and Keltron Cannonor Kerala, and Balmore Lorry and Co. Private Limited, Kochi. As a materials management professional having specialization in matters of foreign trade policy, customs, and GST related to exports and imports, having served the above organizations from 1971 to 1988, and he resigned in 1988 as AGM Commercial at Balmer Lorry and put up his own consultancy firm under the name and style of Trade Track. He has extensive practice at Kochi in matters of FTP, customs, GST, SEZ, and EOU. He has expertise to set up SEZs and EOUs and had set up a number of such units for various clients. He is former Regional Director of Export Promotion Council for EOU and SEZ and organization under the Ministry of Commerce, former advisor to National Chairman EPCES and member Trade Facilitation Committee Customs and Customs Clearance Facilitation Committee Kochi. And in various platforms, he was the advisor to Indian Oil Corporation for their SEZ project and Hindustan Aeronautics Bangalore for their helicopter exports and Bharat Electronics Bangalore. And in regular consultant to a number of multinational and PSU corporates and individual exporters in Kerala, Karnataka, and Chennai. He has a small setup at Delhi to handle licensing and Department of Revenue matters and also to prepare and pilot representations of clients on matter of FTP, customs, GST, SEZ, and EOU. Faculty for the Institute of Chartered Accountants in India for their certification programs at various centers all over India on foreign trade policy, customs, and GST matters. Was the faculty for over 35 classes all over India. Sir, now over to you, sir.
Thank you, and good evening to all viewers And I'm extremely thankful to the association in general and Mr. Subramaniam and Hema in particular for inviting me to this session and thereby giving me an opportunity to interact with co-professionals. I would claim to be a co-professional, but you may not agree to that because I am not a CA. But nonetheless, the profession is the same that we are doing. So that's why I'm happy to address all of you, and I'm sure within this short period, we will try to understand each other and also deal with the subject to the extent that is possible. Now, at the end of the day, I am not very sure whether I'll be able to convey what you wanted to be conveyed to you. I'm not very sure, nor can I guarantee that now. But generally, people say that quality of my talk is indirectly proportional to the hope that you carry. So, I hope you will understand the situation and the thing. Emma, I am not able to see anybody. What do I do?
Yes, sir.
I am not able to screen.
Huh?
Can you help me? I'm not able to see. I'm only able to see myself.
Sir, to the right hand top side, you have a small icon by name View, sir.
By name?
View, VIEW, View. Right hand corner.
No. I'm getting there one fortnight and then EPIC games, and then I have a red into mark.
No, right below the red into mark, you have a small icon by name View, sir. VIEW.
No, I'm seeing cancel, feedback, and all that. Your name is appearing.
Right hand side, I believe, sir.
Sir, right hand side to the top corner, sir. Right hand side top corner.
No.
Is it? There's one place where you have view, where you can shift from.
Yeah, view. Yeah, view. We have found.
Yeah,
view.
Gallery. You can just click on the gallery, sir.
Yeah, I have clicked on the gallery. Yeah.
Gallery. Yeah.
Now I am finding your name on the left, your picture on the left now.
Okay.
And the emblem of the association underneath.
Okay. But
again there is a view.
I'm not, sir. I think the participants are not allowed the option of the enabling their video. I believe. So I think only the panelists is what you are able to see, sir.
Yes, sir. Only the panelists, not for the participants.
Okay, fine. That's fine. That I didn't know.
Okay, fine, sir.
Yes.
Okay. Panelists in the sense, both of you.
Yes. Okay,
sir. Fine. Good. Because I may not be able to feel the emotions of the speaker. That is the whole problem. And in a meeting like this, sometimes that signal is important. Now, for example, I am only seeing myself. So, anyway, can I carry on?
Yes, sir.
Yes, please. We will try to see if we can change the settings when the meeting is on, sir. We will just try to see if that can be done. Yeah.
Fine. So I'll carry on with my job.
Yes, sir. Please.
Okay. Now, friends, the general purpose of this topic is to try and explain to you as to how a chartered accountant can very easily step into foreign trade policy and customs areas. That is the, what shall I say, key theme of today's talk, which I will try and do my best and try to convince you that you should come out of your shell. That will be the second portion. But the first portion of the talk, I'm sure you need an appreciation when you are getting into a particular field. I think you should know its history and geography. So the foreign trade policy, how it evolved, what was the need for a foreign trade policy, what are the export incentives that you had. So right from 1950 onwards, the time we got independence, right from 1950 onwards, government has been behind the manufacturers in this country, and the manufacturers have also been behind the government for their incentives, for part of incentives. And therefore, a lot of interaction has taken place between the two, as a result of which certain export incentives, I would call, today you can't call it incentive because it's a bad word today. But anyway, 1950 incentive was a very good encouraging word. So from 1950 onwards, up to 1920, 2022, let's say 20, for this period of 70 years, I will try and briefly explain to you the logical genesis of each and every export incentive scheme that has come to surface, and the natural decaying or dying of exodus of those schemes, and ultimately concentrate on the current very little schemes that you have. Now this exercise, this analysis, I thought is very, very necessary for you, because you should prepare your mind with the background of what has been happening in this country as far as the exporters were concerned. So therefore, the development which took place over a period of long 70 years, I plan to compress it in about 70 to 80 minutes. So you can imagine the scale on which I'm bound to explain. That's the scale that I have, 70 years progress in 70 or 80 minutes. Anyway, I'll try my best to do that. Now, immediately after the transfer of power from the British to Government of India, you know the situation. I'm not talking about political situation, the economic situation. Now, prior to independence, up to 1947, some of you, because I'm not able to see your faces, therefore I am not able to gauge your age. At least some of you will now recall what are the items that we were importing just before we got independence. Imagine 1950, 1947, during that period, what were the items India was importing prior to independence, not after independence, prior to independence. During the British regime, I think you were importing everything in this country. Everything you were importing, including, let's say, food items, raw food, cooked food, half cooked food, baked food, half baked food, everything you were importing. Educational items for children, paper, register books, notebooks, pencil, eraser, rubber, pen. All sorts of items we were importing, because we had no manufacturing base at all. Domestic items, gadget. When I say gadget in 1957, a knife was a gadget. A knife with which you cut the lemon was a gadget at that point in time. That we were importing. Personal use items, watch, specs, cosmetic, hairpin, rubber, nail cutter, nail polish. Name what you have. Plus, of course, the industrial inputs, the little what is required for whatever small industries we had. So absolutely we were not producing anything in India except the God-given things like seafood was not produced by you. Coir, that's not produced by you. Spices, not produced by you. Cashew, not produced by you. Some of these industries were processing, but that too, it was for export. It was for UK. It was the Sahibs, the white-skinned people. So we were virtually deprived of anything that we produce, and we had to depend heavily on imports. But I am told, I don't know, 50s, I don't think I've seen the reality of life in 50s. I was told that there was no scarcity or shortage of any item in the country. Everything used to come. Imports used to come, spick and span. Absolute logistics, Just in time it used to arrive. How was this possible? How was it possible? And how easy it was for them to import? Because the entire import accounts were maintained by Her Majesty's account in UK. And India was only a ledger folio for them. They never bothered. India did not have any foreign exchange, because what foreign exchange India can have? What will you export for earning foreign exchange? You have nothing. Then how are you importing? You are importing under the grace of Her Majesty in UK. And therefore, to British government, the whole mass of India was only a small ledger account. We had no factory worth the name. Very, very few. And when we got independence, the entire situation changed. Her Majesty's help drained out. You cannot depend on UK now for Indian imports. At the same time, overnight, can you ever stop these imports? Children's milk powder were being imported. Children's food items were being imported. How will you suddenly stop them overnight? From 16th February 1947, how can you stop your imports and say these are restricted items, these are prohibited, and these are some of the IAS officers use these words, prohibited, restricted. Can you use them in 1947, August 16th? Could anybody would have dared said, sorry, milk powder is a prohibited item, you cannot import. Then give me milk powder, produce it in India. Isn't it? Now look at the gravity of the situation when we got independence. Many of us don't realize this. And that's the reason why I am taking you back to those days. Not one pie of foreign exchange in our pocket, not an ounce of foreign exchange, not a drop of foreign exchange with us. Everything was dried up. All must be said to the eternal wisdom of you, that man may have 100 negative aspects, but because of that person, Mr. Jawaharlal Nehru, the country was steered out of immediate crisis of economy. You know what he did? The moment we got independence and we wanted imports very heavily, we have no foreign exchange of our own. So what we have to do? We have to take a loan. And how do we take a loan? How do we polish our balance sheet to get a loan? What is the balance sheet that India can present? Nothing. You have to make it rosy. Either you have to make the paper rosy, or you must ask some rosy people to recommend your case. Then you get it. So therefore, Mr. Nehru immediately after getting independence, he joined the Commonwealth Club. Commonwealth Club was an elite club those days, where respectable nations, developed nations were all in that as a member. Underdeveloped countries were also members, but we jumped to the conclusion and immediately said, let us join the Commonwealth Club. Nehru was criticized for this. It's a waste of time, waste of money. You are still going behind the Europeans. All this was said. But joining the Commonwealth Club gave us a very good benefit, that we were able to muster credit from all the developed countries like UK, West Germany, Swedish, Sweden, Italy, then USA, French. So our Ministry of Finance took loan from all the developed countries, and therefore some of you must have heard there are loan agreements. UK India maintenance loan, UK India capital goods loan, West Germany capital goods scheme, West Germany raw material scheme, Swedish credit, Swiss credit, Japanese credit, that is yen credit, Italian credit, USA credit, French credit. All the countries gave us loan. Every country gave us loan. Loan in foreign exchange of that country. And therefore, we had to buy things from them. Again, we had no choice. I can use a yen credit only to buy goods from Japan. I cannot use that credit for buying it from Germany. So he will fleece me there also. Doesn't matter. Fleecing is better than survival, no? So will you survive? So these loans were taken from all the countries. Every country we have taken loan. And we managed with the loan. There were tied credits. There was an office called Controller of Aid Accounts. And everybody gave us loan. Everybody gave us. Why do you think they were so liberal in granting us loan? Because they knew that India has an immense stock of gold with them. Rangarajan has gone on record to say this. That India had the largest storage of gold, but unutilized. So people knew how wealthy you are, but you do not have the enterprise enough to bring it up, bring it out. So if not today, tomorrow, this man is going to pay me back. I have nothing to worry. He's like a prince with full of gold coins in his pocket and in a fit of madness going around the MG road and begging, de do, kuch de do, khana ka de do, khana ka de do. And the man who is giving the alms could clearly see the gold in his pocket and knew that he is not going to run away. He is a very noble fellow. He is not going to run away. He is a rich man. So all the country have given us good. Otherwise, tell me, see, you're a chartered accountant. As a chartered accountant, you imagine the balance sheet of 1947. Which bank worth its name will give us money? But we got. The fact of the matter is we got. All these countries that I mentioned, we got loans from. It is because of this single factor. Then immediately the crisis was tied down because the house was on fire. Now that was extinguished. Then they started thinking how to improve the situation. We cannot be borrowers in the whole life. But at the same time, we can't stop their imports. So imports should not be stopped. We should earn our foreign exchange. What is it? Catch in it. What is the problem that we have to face? They had a time to think once this immediate crisis was over. The crisis was tackled through taking loan from other countries. Fortunately, as of today, we have paid back everything. Everything we have paid back, not one pie left. So then the government started some around this happened in 1947, 48. So 1950, the government said, we cannot leave things like this. Please ask all the people to come and let's have a meeting. Let's have a discussion, open discussion. How do we go about? We want foreign exchange in our kitty. How do we go with this foreign exchange? How can we go about? So all the industrial champions in those days were called. Ida. All the champions were called. Sorry for disturbance. All the champions were.
Sir, you're audible and your video is visible, sir. It is very clear. You can continue, sir.
Sound, sound also, no problem.
Absolutely. Yes. Both are clear.
Okay,
yes,
then let's not waste our time. So right when the meeting was called in Delhi, all the people came and they started talking to each other and as to how do we increase this revenue of foreign exchange. Foreign exchange can be increased only by sending our goods out and earn foreign exchange. And that's very simple matter. Either goods or services. Services, government said, trade also agreed. That's not twice to talk about services and waste our time now, because it's very difficult as of now, rendering services. Let's start with the manufacturing base. Then they came to the manufacturing aspect and said, ask the manufacturers or potential exporters in the country, what exactly is your problem, sir? Why are you not able to export? You are manufacturing certain things. What is your problem in facing international market? Why is it that you are not getting orders? Simple question. So the trade in one voice said, what is the reason why you are not getting these orders? So the trade in one voice said, if you want a straightforward, one single answer, the reason for our not getting the export order is Government of India. You are the people who are responsible in our not getting the order. We have built up a little bit of technology, our own innovations. Indians are definitely intelligent. We can do something with whatever know-how we have. And some of these things are acceptable in the world market. And some of the items that we have to import, we'll manage all that. But you are standing in our way in making our exports impossible. The government said, why? Oh, we are in your way. We are coming to you to explore possibilities of how to export. And now you are bluntly telling us that I am responsible in your not getting the order. He said, sir, let me explain. For example, I am manufacturing a product X. And this requires certain domestic raw materials, certain imported raw materials. And together I mix, I import. I calculate my cost and add a meager 10% margin onto that as my profit, and then send this to the market in Germany or Japan or wherever it is. My product is also placed on their table for exhibition. Exhibition means not literal exhibition, for their consideration. And there are similar products coming from UK, coming from Japan, coming from Korea, coming from other places. Along with that, one Indian product is also there. Now, the pricing pattern we found in all places, all exporters in India, in all places they visited and went for with their product, found that we are fortunately the highest priced people. If a product is costing $100, is what I'm producing, and that $100 is the lowest price in the international market, for me, unless I get $500, I will not get $50. My 10% I will get only if I price a product at 500 or 400 maximum. So where is 400? Where is 100? Then the government said, yes, why don't you bring it down to 100? Such a simple question. Why don't you bring it down to 100? Then he said, again, you are responsible for this. He said, please tell me what is the duty that you are collecting. I'm importing stainless steel. I'm manufacturing a product called, let's say, floating valves, for example. Now, to manufacture these valves, I require stainless steel plates. So please tell me, sir, what is the rate of duty that you are collecting for stainless steel plates? So the secretary looked at the finance secretary looked at the joint secretary looked at the departmental person, and ultimately he said, sir, we are charging 300% for stainless steel. So 300% duty on my basic raw material you are charging. And a product like valve, for example, do any one of you have an idea? Any one of you means not chartered accountants. It is the crowd, the exporter is asking the government. Do any one of you know what is the material content in a valve percentage? Should be around 70 to 80%. So if a valve is costing about $100, $80 goes to material cost. And if I import that material, you are charging me 300%. This 800 is inclusive of your 300. And if you don't collect the duty of 300, what will be my price? I'll be less than 100. I can compete in the international market. I may be 120, 130. Even then, I'll cut my costs. I'll reduce my margin. But then all this won't do. You're a big giant sitting here collecting 300 rupees the moment my item crosses the border into India. Everybody was having the same complaint. Then they said, government said, oh, is that the case? Yes, of course, that is the case. Then they said, okay, if you have got export market and you can manufacture the goods to the satisfaction of the exporter, when you calculate your cost, please eliminate our duty. We will return this duty to you back the moment you export. This is a scheme, the first export scheme post-independence, post-independence announced by the government of India is the scheme by which the duty paid on your inputs is returned to the exporter after the export is made. And this is called the duty drawback. The duty drawback scheme. So through this duty drawback scheme, you will get your money back. Now rework your cost and then see what happens. So these people reworked their cost, tried to submit quotations. Unfortunately, they were able to, though they were not able to match the lowest price, but then they were in the first 3 or first 4, and therefore they used to get some orders, and many, fairly good orders as far as India is concerned used to come because the government has started giving this incentive of duty drawback. So when duty drawback was given and the cost was reduced and the exports were coming, the government was very, very closely monitoring. Let me tell you, friends, government of India was more eager to earn foreign exchange than the exporter himself. Let me tell you, even today, irrespective of the party affiliations, government of India, whoever is the party in the center, is absolutely keen, more keen than the exporter himself to earn foreign exchange because it is a necessity for the country. Therefore, all these steps of export promotion was taken with a view to enhance our foreign exchange inward remittance. Therefore, the very first step that they took was the money that they have paid for their inputs, raw materials and components will be paid back. And the word drawback itself indicates the simplicity of the scheme, though later it became into a very complicated matter. Drawback means what government meant to us. You can draw your money back. You can put your hand into our government of India kitty and draw the money back. That's why it is called drawback. Not that it has got a drawback, weakness. But now that system has got only drawback. That's a different matter. So the very first scheme was duty drawback. Now this duty drawback scheme went for a couple of years and found that our foreign exchange position is slowly improving. We don't have to ask help from many people. We are trying to reduce it because our foreign exchange is fairly increasing. So the government took a second review of meeting and said, how are you? How are you progressing? Are your exports good? Is there any way by which you can stop it? Increase it. The government said, yes, drawback scheme is good, but you never intended this drawback scheme to have a drawback, a weakness, but we find that there is an inherent weakness in this. He said, when you are asking me the data for payment of duty back, you are asking me for a mountain of data. What are all the purchases I made, invoice copy, what is the quantum of each item that has gone into production of each item. All these details, paperwork you are asking, okay, we are prepared to give. And this is monitored or fixed. The duty drawback is fixed only by one office in the whole country. Jeevandeep building. It's a building where they used to fix up drawback rates. And sitting there, they used to fix up drawback rates for all the products. that is exported from the country. Hundreds and hundreds of products. Because the scheme became so popular, the exporters knew that the duty that I pay, I'm going to get back. So why worry? So therefore, the trade said one inherent weakness in this is when I submit my application for duty drawback after the export is over, the intention was that I can draw my money back. That is why it is called drawback. But the true drawback of the scheme is that I get this money only after 6 months or 7 months. And at that point in time, interest was 18%. Working capital interest was 18%. Next to material cost in a profit and loss account, it was interest. So bank used to take 18%. So my raw material cost is 80% of my selling price. And the duty element of that is held with you for more than 6 months. What is the interest element that I have to pay? Where will I charge that? Where will I account it? Should I not account it in my cost? Again, my cost is going up. So why do you keep so long? Why do you reduce the paperwork? Government, they never reduce paperwork. They'll do anything else but reduce the paperwork. Government said, no, sir, all this is required. His date of birth is required. School where he studied is required. Headmaster's name is required. Banker's name is required. Banker's neighbor's telephone number is required. All this data they will ask you unnecessarily and delay the matter. So that they said they cannot reduce the paperwork. So then the export members said, then do something else. We cannot. You are giving us the duty back. All right. But when? After 6 months. My interest, meter is ticking. I can't wait. You must do something about it. Then the ministry said, okay, we'll come up with a new plan. Don't depend on this drawback. Drawback is when you pay the money and then get it back. We'll provide you a scheme by which you don't pay anything at all. You bring the materials, take it to your manufacturing warehouse, manufacturing place, manufacture the goods, export it, and then give us an account. You don't pay duty at all. The manufacturers were very happy. Exporters clapped their hands. All that was fine. But when the notifications came, there were some glitches attached to it, as usual. The ministers will say so many things, but the bureaucrats will put tails onto it. So when the scheme came out, it worked out that the whole area of your manufacturing operation will be declared as a bonded warehouse. You're a slave in that bonded warehouse where duty paid materials are kept, and you can use your materials, you can produce, export, and thereafter give an account. Now for all this, we will provide a supervisor to supervise your operations, a policeman. He will come and sit in your factory. Even that is acceptable. Okay. Let him come. We have nothing to hide. Let him come. So that was a scheme that came out. And when that scheme came out, people said, okay, we don't want drawback. This is far better. Whatever items we need, we will import. We'll give an account of all that at the end of it. The whole area will be bonded. What does it matter? Whether we call it bonded warehouse or any other warehouse, we don't mind. As long as we are producing goods and sending for export, doesn't matter. And one person will be sitting there. Let him sit there. We'll give him coffee and tea. That's all. So this went on for 1 or 2 years. People were happy. But then the tragedy of it was, as years passed by, the small scale sector could not afford this type of business. Because I am having 3 shifts. The department said, I will have to employ 3 people there. 3 supervisors, 3 inspectors. I have to engage them there in all your 3 shifts because I have to oversee whether you are using the materials rightly or wrongly. So these 3 people were stationed there for 3 hours, 3 shifts. And the government also said in the notification, silently, in small letters that the entire expenses of these bond officers will be borne by the exporter. Initially, when it started, this fellow's inspector's basic pay was 240 rupees and 380 rupees city allowance. That's all. City compensatory support, all that total salary bill came to about 700 or 800. So 800 per month, about 10,000 rupees per annum, doesn't matter. But with number of pay commissions, this, that, and the other benefits, the wage rose enormous. And today an inspector is being paid nearly 1 lakh of rupees. So one shift, one inspector, 1 lakh of rupees per month. How much it comes to? So they said, this is for costly. Where will I add this cost into? I cannot tell my buyer to bear this cost because Government of India has decided to increase the export by putting 3 policemen there, and I have to meet their expenses. So you please bear. Who will bear that? I have to bear. And if I can bear, I cannot get an international price at all. Therefore, for some time it went, but then the system is still there, but the takers were very, very few. There were only very few takers. Are you hearing me, Mr.
Yes, sir. You are audible, sir. You are audible, sir. Very
You're
clear.
audible? No problem.
Yeah.
Because in case you are get stopped, please let me know. Call me
Sure.
on my mobile because I'm going on talking without knowing your emotions. Okay, fine. If any correction required from my side, please feel free to tell me.
Yes, sir. No problem.
Because I'm not seeing you. That is my greatest disadvantage in this.
That's true.
I have no way of judging your feelings, nor you have any way of see. I don't know whether you can see me.
We are seeing you, sir. All of us are seeing you.
Okay. So okay. Then I can't be funny. You can be. Anyway, so right. So I'm continuing. So therefore, the second scheme which came as an inbound facility, inbound manufacturing facility, first was a drawback, then was this inbound facility. The inbound facility also, it did not work out well. It was a flop, and therefore Ministry of Finance said, I have no more things to offer. This is all I can offer. I have nothing else to offer. If you don't export, you don't export. I can't do anything. But there is one friend of ours called Commerce Ministry, whose responsibility is to increase the exports of the country. Therefore, Commerce Ministry said, no, we will provide a scheme for you and we'll monitor that scheme. You don't worry about it. We'll monitor a scheme. So the exporters, but even with these 2 schemes, mind you, the export was surging. I'm using that word surging because this is the word that has been used in those times. Exports are surging. Foreign exchange position improving. Interest of the loan paid back. Paying back interest of the loan at that time itself was a very great thing. So Japanese loan interest paid back. Netherlands loan interest paid back. These were the slogans that we heard from Delhi during those days. So therefore, both the schemes, incentive schemes, did work well, but due to change of situations and change of time, change of operations, it had to be modified from time to time. That's the reason why I say every scheme has got a genesis, every scheme has got an exodus. So the drawback scheme still remains. Inbound manufacturing still remains, perhaps in a different attire. But these 2 schemes, which is incorporated by Revenue Department, administered by the Revenue Department, still remains in the statute books. That has not changed at all. But for easy operations, Ministry of Commerce, sometime in let's say 1975, 1975 period, they came up with a proposal and they said, we are going to help you out of this crisis. I am not asking you to go under the drawback, nor am I asking you to go under inbound manufacturing. You come to me when you get an export order, you give me a letter saying that I have got this export order, and to execute this export order, I require A, B, C, D, E, F materials. quantity of materials required is such and such quantity, and this is a price for which I have to buy, and this is my export product. This is the value of my export. In other words, you give us a contract copy of the export contract, purchase order copy. And with that purchase order copy, you come to us with your detailed bill of materials, what you want to import, whatever you want to buy indigenously, you buy, I have no problem. But what you import, you give me a list separately, and we will attest that list and give it to you. And that list, materials contained in that list, you can go to customs, import the items without payment of duty, bring it to your factory, give us a bond, an undertaking that in case you don't export, you will bear the duty. So that bond was also given, and people went into the manufacturing. And the time given to them was 18 months to fulfill their export obligation, and extended time as and when they are not able to fulfill for genuine reasons. So this scheme introduced by the Government of India Ministry of Commerce was known as Duty Exemption Scheme, and more particularly Advance Authorization Scheme. That means you get your materials in advance, you don't pay duty, take it to your factory, no policeman, no bonded warehouse, nothing. We believe, because you have been a regular exporter, we have been watching your performance, we believe you, we trust you because you trust us. So we trust you that you will not do any jugglery with the material that you clear without payment of duty. Take it to your factory, aram se, don't bother about anybody, no policeman will hold your hand. You take it to your factory and do your production, export the product, give us an account. These are the materials I imported, this is the export I made, and in that export product, the following raw materials which I imported have been contained. Give us a statement, close the license. So when you apply for an advance authorization, you get an advance authorization in a particular format. All this letter and all that, I simplified it, but there is a format, there is an appendix. You know, Government of India cannot work without appendices. So all that appendix and formats, INF, P2, 3, all that is there. So in that particular format, designed format, you make an application, you give us, we'll give you the license, and you also tell us what is your norms of wastage, how much you will waste in the process, because for the wastage also we have to pay the duty, we have to suffer the duty. You are not paying the duty for that also. So you should not account a huge wastage and say, my product is a very unique product, it has got 98% waste and 2% yield, and then you cannot siphon out duty-free materials for that 98% wastage. So that we'll monitor. Our experts in our DGFT office will examine all that and give you a final clearance. But you can take this. This is a scheme called Advance Authorization Scheme. Now, when the moment this scheme came, like bees going into a beehive, all exporters abandoned all the duty drawback, inbound manufacture, all that, and they embraced this advance authorization. And there was a big surge for advance authorization. And in 1 year's time, the exports grew up 3 times because of this single scheme, the facility that is offered to them under advance authorization scheme. That scheme still exists. The scheme still exists. And in its, profound plan, but then attires are different, some rules and regulations and procedures are different, but ultimately the idea is this, that you can get duty-free imported materials for execution of an export order. As simple as that. And within the next 2 years, there was 3 times export performance. The government was very happy, beyond words. And Commerce Ministry was praised left, right, and center. I think Mr. Narayan, somebody was the Commerce Minister at that point in time, ex-president. All those stalwarts were ministers at that point in time. VP Singh, these are all the people who handled those portfolios. Anyway, so this scheme has come as a big boost for the exporters. So they, after a couple of years, around late 1970s, they called up another meeting and said, how are you? How do you do? How is your exports going? People are generally happy. Exporters said, we have nothing to complain. The scheme is working well. We don't have the policemen to come and hold our hands. We don't have to pay huge, and these charges that we are paying them is called cost recovery. Whatever cost you incur, the government incurs on those three bond officers. The cost of their officers, these officers, to the government of India was recovered from the exporter. Therefore, it was called as a cost recovery, little realizing that very soon that cost recovery has become a costly recovery. Anyway, so that was the history of that two schemes. And this new scheme was picked up very well. And in the meeting, they are all praising Ministry of Commerce for the help that they have done to the exporters. And government was on the other hand thanking the exporters for the contribution that they made to the building up of the nation. And they said we have been able to pay up our loan to a considerable extent. Foreign exchange position is improving. All these blah blah talks were given, and they asked suggestions from the exporters whether they can suggest any methods for improvement. Then a team of exporters said, sir, man shall not live by bread alone, meaning goods cannot be produced by raw material alone. The facility that you have given under advance authorization is for import of raw material. Listen carefully. For the import of raw materials, components, consumables, spare parts, packing materials, and other things. These are all the materials that you are allowing under advance authorization. So far, so good. But do you think I can produce a product of global excellence with these raw materials and inputs? Don't I need a machine for it? I have a machine in my factory which was made in 1935, somewhere in Jalandhar. To operate that machine, 3 soldiers have to come in the morning and give left and right, kick the machine, then only it will start. And some people have to place it there. Sometimes it will turn west, sometimes it will turn east. All these tricks you have to apply on the machine to work it, because 1935 model. We are now talking in 1980. Can I show this machine to a person who is coming to inspect our factory, our buyer, our customer? He will stop ordering immediately. Oh, this is the type of machinery with which you are manufacturing my goods and hoodwinking me. Can I show them, sir? Please tell me. All these machines are already, when it was purchased, it was second-hand, condemned by German. We took it as a second-hand machine. And now this has become good for nothing. Still we are running. That is ingenuity of Indian engineers. But this cannot be shown. Therefore, entire replacement of all the machineries are needed. When the government said, please import, we are not putting any restrictions on you for import. Similarly, on the other side, DGFT were also putting restrictions, saying that just for the sake of ensuring that you don't import what you don't need, they were putting restrictions. Only items which are covered under OGL can be imported. Others are all restricted items, prohibited items. You know, under OGL, the first list of OGL contained only 10 permitted imports. That was the OGL first list. And government said, anybody who want to import material material covered under this list can import without our permission. Because prior to that notification, every import had to be obtained a license. You have to go to CCIND, that time it was called as CCIND, Chief Controller of Imports and Exports, and get a license. So now onwards, these 10 items, you need not get any permission. People are happy. These 10 people are happy. Today, no licensing restriction. Only a few items are restricted, which require a license. Few other items are prohibited, which cannot be imported at all. Isn't it? Look at the difference. Where we have come, where we are now. So these people said, machinery I have to import. And when I have to import machinery, please tell me what is the duty you are collecting. Again, secretary to joint secretary to deputy secretary to staff in the ministry, information coming back in the same channel. And ultimately the minister said, yes, it is 80%. 80% duty you are collecting. And mind you, 80% duty you are collecting on my fixed asset. How many years will it take for me to recover? If you charge 300% on my raw materials, I can understand. Because once but machine, it's a dead investment. What do you call it? It's not a dead investment. There's some word for it. You can recover it only in a long term. So 80% duty on my capital goods is blocked there and I cannot recover it. Isn't it? Then the government said, what do you want us to do? You do what you have done for raw materials. You give us exemption for capital goods import also. Government had no choice because they knew that these schemes will not be misutilized generally and that the schemes are helpful. They have seen it for themselves through this raw material import of advance authorization. So then they announced, yes, we will give you a payment of duty. Earlier it was 5%, then later on it was reduced to 0%. You can import, but on one condition, that you must give us an agreement, a bond, that you will export, earn foreign exchange out of goods exported by this machinery, 6 times the value of the duty saved in 6 years' time. Look at that range. Suppose the value of the machine is 1 crore and the duty that you saved is 80 lakhs. Isn't it? 80% is 80 lakhs. So when I buy a machinery at 1 crore, I am not paying duty of 80 lakhs and that is a duty saved for me. So government said 6 times of that 80 lakhs, 4.8 crores, you must earn foreign exchange in 6 years' time, not tomorrow. First, the trade never understood. 6 times, they said. 6 years' time. 6 times the duty in 6 years' time. Then they thought over and said, yes, of course, this is possible. Then go ahead. And this scheme, again by the Ministry of Commerce, is called as EPCG scheme, Export Promotion Credit, Guarantee Scheme, EPCG, Export Promotion Capital Goods, EPCG. So the capital goods were free to be imported. They started importing capital goods. Now look at the range. They can import their capital goods, spare parts, instrument, tools, jigs, fixtures, everything covered under the definition of capital goods, plus the raw materials, components, consumables, everything they can import if they want to import without payment of duty for export. So a wonderful combination of advance license and EPCG together, these two batsmen batted India very well. Capital goods duty free, inputs duty free. Exports went up 10 times. 10 times. Indian exporters are not idiotic. They have the talents. Given the requisite infrastructure, they will prosper. 10 times the export went up in the year 1985 to 1990. Because 85 was, I think, 1980 was, EPCG was introduced, 1980. So with advance license and EPCG, a golden combination, the trade went. So these two important schemes, they are still even available today. Now, the government was so heartened to see that some benefits, if I give to these people, they will work wonders. Hey, we have seen, we have given a duty concession for raw materials. We have given a duty concession for, what do you call, capital goods. See how they have grown. Leaps and bounds. Quantum jump they are making. Therefore, the Commerce Minister at that point in time convinced the Prime Minister and said, sir, why not we bring an initiative by ourselves? All these days we were asking them, what is the suggestion, what do you want, how do you do, what support can we give? No. Now let us give some positive support without their asking. And they drafted a plan and they started a scheme of SEZ and EOU. SEZ first they started. So they called all people again to Delhi. We want to give you a big announcement that we have come with a very huge scheme. And what is the scheme? If you are a genuine exporter, we have identified a place for you where all exporters can put up their factory, and we have operating the scheme in 7 places in the country. One is Noida, one is Calcutta, and one is Mumbai, Seeps, Santa Cruz Export Promotion Zone, and one was in Hyderabad, Vizag, one was in Tamil Nadu, one was in Kerala. So 7 zones like this they started. Then they called as export promotion zones. Haldia, Calcutta, that's the export processing zone there. So 7 export processing zones were started, and the government said in all these 7 places, we have acquired huge land with developed facilities, water connection, power connection, telephone connection. And also we are building half the portion of the land, we are building standard design factories, SDF. You can just come and occupy. And what facilities we are giving you? Today, what facility you are enjoying? Advanced license and EPCG. How much of time you are wasting on making the application, going to JDGFT, taking the application, then monitoring the export obligation, fiddling with customs. How much time it takes for you? How much of transaction cost you are spending? But we are giving you a blanket approval that whatever you want for your authorized operations, underline, for your authorized operations, for making a pan parag, you cannot import gold. So that's not required for authorized operation. But whatever items you require of any nature, whether it is capital goods or raw materials or whatever it is, even building material, you want to make, you bring them without payment of duty. And those days they gave the facility, no income tax for you people who are operating under SEZ, under this scheme, export promotion scheme. Local purchase, central excise, duty free, everything was duty free. The whole area is called a duty free area. It's a conclave. The moment they knew this, so many people fled into that place. Khandla was the 7th one, I forgot. I mentioned to you only 6. Khandla didn't come to my mind. So Khandla, Zeps, that is Mumbai, then Calcutta, then Noida, then Chennai, then Cochin, and Vizag. These are the 7 places where you had export processing zone. Subsequently, they were renamed as special economic zones. So today's special economic zones are these mainly government operated economic zones are only 7. 7 government developers are there. But the business went so well that even the private players are now allowed to set up special economic zones, and they are doing the job. Yes, there has been a bad period for them, but things are improving, and therefore this SEZ scheme is also working well, under which the income tax benefit has been taken off. It is no more available, but your duty-free materials continues. Operation is trouble-free. Nobody will come and bother you. For the entire area of SEZ, there is a customs office, and he will be common officer to all the units. Suppose there are 400 units in a complex, the entire complex is called an SEZ. For example, in your area, Bangalore, we have a SEZ in Cochin. So Cochin Special Economic Zone we have here. In Bangalore, you have private zones, Maitra and Wipro, all these SEZs, private SEZs are there. But there the facility is all same, and all are regulated and controlled and guided and developed by the development commissioner, whose headquarters is in Cochin. He got an office in Bangalore. Similarly, MEPS, Madras. Similarly, Calcutta. Similarly, Bombay. Similarly, Khandla. Similarly, Noida. All these 7 places there are development commissioners. Under that development commissioner only, even the private SEZs do come. So these private SEZ people came, and when they were flourishing, some of the people in the domestic industry, they said, sir, why don't you give such facilities to us? Why should we come all the way to Kandla or some other long place? I have got a place here in my own courtyard. I got huge land here. I got a place. I want to build a factory here. People here around will get the job. Why don't you give me the same facility here? Government granted that facility also. They said, if you have a place of your own, you can start a unit on the same line and model of SEZ. We give you all the facilities that an SEZ enjoys, duty-free materials. And these schemes, these units are called, but you have to export your entire 100%. Because from cess also you were expected at that point in time to export 100%. Similarly, here also you have to export 100%, and therefore you will be called as 100% export-oriented units, EOU. Now, of course, that percentage is removed. If you are paying duty, goods can be sold in the local market also without any limit. So therefore, that 100 is removed. It is now simply called EOU, export-oriented units. So see the schemes now, how it started. Started all with the drawback, inbound manufacture, advance authorization, EPCG, SEZ, EOU. Now, again, government had a meeting, a review meeting, and in that meeting, generally people expressed happiness, are doing very well. But there is a group of 4 or 5 people cornered together in one corner of the room, and they were murmuring. So the minister asked him, what's wrong with you? You don't seem to be happy. And they got up and said, yes, sir, we are not really happy. No, tell me your problem. But sir, I have to explain it a bit. You have to give me your time. Don't run away within 5 minutes. Give me 10 minutes to explain the case. Sir, please go ahead. Sir, in accounts, making less loss, is it not equal to profit? What does that to do with this, mister? I'll tell you, sir, if I answer this question. If I make loss less, is it not equal to making profit? The minister said, yes. Okay, fine. Half my problem is solved because you have understood. Now, you are giving all these benefits for what? For exports. Why you want export? What are you talking? Why you want export? Earn foreign exchange. So ultimately, your aim is your foreign exchange earning must be high through exports. Therefore, for that exports, you are promoting. Very good. I have no dispute. But your intention is not promoting exports. Your intention is increasing foreign exchange. So if there is a technique or method or technology or system or practice by which I will increase your foreign exchange in the accepted manner, and yet I don't do export. Can I be not given that benefit? No, no, Mr. Make it clear what you want to say. I'll make it clear, sir. I am doing import substitution. For example, there is a valve or there is a compressor. So far, the compressor has been imported in India. No compressors of that nature is made in India. A special type of compressor, not made in India. I, with my ingenuity of my team, I manufactured that compressor, made a trial run, sold it in the market, got a good report. People started buying compressors from me, this type of compressors from me. With a result, they stopped importing that. And they used to buy my compressor. Now, in the process, sir, what is happening? I am not earning foreign exchange, I agree. I am not a foreign exchange earner, but I am an arrester of foreign exchange outflow. Have I not arrested the outflow of foreign exchange to that extent? Therefore, if I have not contributed to the inflow of foreign exchange, I have contributed to the arresting of outflow of foreign exchange. I have made less loss to the foreign exchange of India. And therefore, am I not treated as an exporter? Should I not get benefits? It was a clean bowl. He had no answer. Minister had no answer. But then when bureaucratic joint secretary got up and said, no, sir, this is not possible. The trade asked why? Why is it not possible? Mr. Please read the definition of export. You are saying you want to be an exporter. Please read the definition of export. Where should I read, sir? Any book will give you definition of export. You can read foreign trade policy. You can read Customs Act. Anything, any book you read, you will get a definition of export. What is export defined as? With all its grammatic variations and cognate expression, export is when goods are going out of India. Full stop. So in your case, are you sending the goods to outside India? You're only supplying to India. Your compressor has not gone out of the shores of India. You are supplying only in India. So how can you be an exporter? Don't be silly. So the minister understood the joke behind it. Minister said, Secretary, no, there is some point in what he said. There is some point in what he said. And he told the trade, look here, we cannot call you an exporter by virtue of this definition. So the trade said, sir, who asked you to call me as an exporter? I am only asking you to give me the export benefits. You can call me whatever name you want. You can call me a toti, no problem. But give me the benefits that you are giving to an exporter where your intention is earning foreign exchange. That purpose I am serving by arresting the outflow of foreign exchange. So again, they discussed and said, we can't call you an exporter. Sir, don't call me an exporter. You call me whatever name you want. Then they decided after lunch that these people will be given almost all the benefits of exporter, but cannot be called as an exporter. Therefore, we will call them as deemed exporter. This is how the deemed export concept came into the picture. Now, once this deemed export picture came into the existence, a number of indigenous ingenious people have worked out and tried to stop the exports from the country, into the country. Because these EOUs, SEZ, advanced license holders, EPCG capital goods holders, all these people were permitted to import left, right, and center. But when they found equally good machine, manufactured in India with almost the same price, if it is offered, why should I import? Don't you think a sense of patriotism will get into you? And secondly, servicing of the machine will be good because the man is here. Otherwise, the technician has to flow from Germany or Scotland or wherever his machine is supplied. Here is a man under our nose. price is not at all high, comparable to international price. Quality is excellent. I have no problem with the quality. Then why not buy from him? So they started making indigenous sales. They have not exported, but how much contribution they made? So therefore, I'll call you as a deemed exporter. So supply all these different type of people, supplies to projects funded by World Bank, supply to EOU, supply to SEZ, supply to advanced license holders, supply to EPCG. All these categories were treated as deemed export. And areas were specified, categories were specified. Every Tom, Dick and Bhutto cannot come and say, sir, I manufactured a candle. So far, candle was imported in India. Now my candle is now made a substitute for import of candles into India. You cannot claim that way. Then it becomes meaningless. It becomes a bizarre. Very rightly, certain areas have been specified. In those areas, if you are able to make a contribution and stop the exports, visibly, we can see that you have stopped the exports. Otherwise, we can't see. We can't take a census as to whether you were importing candles till yesterday or no. But in EOUSC said, I know, I have on record who was importing, and what he has imported. So I can cross check. So if you stop the export and thus arrest the outflow of foreign exchange, that should be treated as an export earning, definitely. And therefore, this deemed export benefit also came. Next came a bunch of export incentives from the Ministry of Commerce. I will have to run through. They are called, I'll just tell you the names. REP licenses, exempt script, special import license, TCS. Now, I am running through the list. One thing, let me tell you, because I have to run through because I have to keep the time. In case you have any doubt at any point in time, after the class, we'll have a session on doubts. But even after that, I'm sure many doubts will not be cleared or many doubts may not be asked. If at all you have any doubt, any of the members participated in this association's webinar, anytime from now onwards, not now, after the class is over, you can call me on my mobile. My mobile number is 98470-34862. Mr. Subramaniam, your office has my number. He'll give you my email ID also. You can call me, you can give me a mail anytime. You can definitely call me morning 5 a.m. to night 11 p.m. Absolutely. That is my time. And I'll definitely try to clarify your points to the extent that is possible. Otherwise, I'll ascertain, I'll honestly tell you, I'll have to find out this, then I'll find out and give it to you. So this assurance I'm giving you because I have no time to complete the lecture in all its totality and in all its complicated areas. So I have to touch upon certain areas and run, but exports incentives are cleared it. Now small things, I'll be telling you the names of the schemes. And if you have any doubt about that scheme, nature of the scheme, you can always ask me. And please don't forget to say that you are from the Karnataka Association of Chartered Accountants, because if you don't say that, you may get a bill from me. And if you say that you are participating in that webinar, then my consultancy is complimentary for you at all times. This is my promise. So the schemes are the replenishment licenses, exempt script, special import license, CCS. Then came the famous DEPB, duty entitlement passbook. And then you had a host of VKG UI, focus product scheme, focus market scheme, market linked focus product scheme, then status house holder, status house, all these different. And finally, till 31st December 2020, you had a scheme called, beautiful scheme called MEIS. That MEIS scheme has replaced all other Chapter 3 incentives like DPV and all those things, not the advanced license and all that. And these benefits were extended to the trade, not for the raw materials or components or capital goods or consumables, but for the additional transaction costs that they have to incur on account of low infrastructure facilities. For example, a truck from the factory takes 10 days to reach the port. If the roads were good, it would have taken 3 days. So road is not your job. Infrastructure you have to provide. The time that you wait and waste in customs and other areas, which is of not your making, all this adds up to your cost. So in order to compensate exporters with some sort of a incentive, a percentage of the FOB value of exports was determined for about 800 to 7,000 to 8,000 items, and they were giving this in the garb of MEIS, Merchandise Export Incentives Scheme. The other was SEIS, Service Export Incentive Scheme. Now these two schemes have also now gone out of the shelf. It is no more fashionable to talk about MEIS and SEIS. Now a new avatar has come, which is called RODTEP, RODEP, Refund of Duty and Taxes on Export Products. And for a selected items of textile and other things, there is a scheme called ROSCTL, Refund of State and Central Taxes Levies. Both in our essence almost similar in nature, but percentages vary. This again is a percentage on the FOB value of exports. RODEP it is called. RODTEP, RODEP. This is a new scheme. This is absolutely monitored and operated by customs in the ice gate system. Therefore, you have nothing to do with DGFT. It is now operated by the customs. Now, these are the various schemes that is available. Now, I must come to the main part of my talk. I confess at the back end of the talk that, you see, the agencies that provide service to an exporter in complying with their rules and regulations, there are three types of categories in nature. One, the pure advocates. The advocates do help the clients, but basically they have an orientation for the law actually, and therefore they deal only with legally linked cases on taxation. They don't generally come for giving a reply to a show cause notice or to a personal hearing, and on a regular basis they do not come. They attend to cases when there is a chance for a writ application to be filed, a rule to be challenged, a policy provision to be questioned. Therefore, they may not come to the forefront or limelight where the exporter expects him to be. So therefore, that category is ruled out for day-to-day operations. The second category is consultants like us, like me. Most of the people who are in this field are retired people, either from service or from a job that they did. Now, those who are retired from service, they have that departmental framework, and they tend to, after having served for 30 years, 40 years in the department, that mindset is difficult to change. It's not their fault, it's nature. So their positioning may change, the geography may change, but the history will not change. Or people like us who have come from various jobs, or rarely people who have put up this consultancy right from the beginning and started doing the consultancy. But in between the two, there is a third category called the chartered accountants. The chartered accountants, I have seen for over 50 years of my professional experience, that the chartered accountants are the most trusted people of business. I'm sure you like my saying this. They are trusted people. Barring exceptions, forget about that. Generally, they are trusted because I have seen myself that when an exporter comes and discusses with me certain problems, sir, I want to start a new product or I want to start a new factory, which way to go? Should I go for an EOU? Should I go for an SEZ? Should I take an advanced license? Should I take an EPCG? What is the route I should follow? Please give me the plus and minus of all these things. Then I explain to him, sit and explain to him for more than 2 hours like this. These are the benefits of this scheme, mister. These are the benefits of this scheme. This here is a comparison statement. He will understand everything, he will understand. And he'll ask me, sir, what is your recommendation therefore? I say, I think it is better that you go for an EOU under the present circumstances. Or I say, it is better you go for an SEC or an advanced license or an EPCG scheme or a drawback advice. He takes it. He says, thank you, sir. What is your fees? He pays my fees. And at the end of it, when he gets up from the chair, you know what he says? I have seen this invariably. He says, sir, I'll have a word with my chartered accountant and get back to you. Most welcome. No problem. Now you see the level of confidence he has in you, which most of you are not aware. You are not aware of your greatness. And unlike lawyers, you are not practicing a simple law. You are practicing its nuances in the field. You have abundance of experience in dealing with income tax officers. The same type of IRS people only sit in customs and Indian Trade Service in JDGFT. The same mindset. So when you can deal that set of people, this is nothing. And that, of course, that is revenue. This is also indirect revenue. Central excise, customs are all indirect revenue. So before the GST came, I was really wondering, why are my friends in chartered accountants not entering into this field at all? In my own selfish reason, I was asking this, because it is only when I talk to a chartered accountant that I get a fulfillment of having discussed this subject very professionally. Because to my own colleagues, sometimes I feel I am the master. The other fellow doesn't know anything. He feels the same about me. And I can't talk to a lawyer. We will only talk law, lexicon, legal terminology, which we don't understand. So I can't waste the time of a lawyer. But when I speak to chartered accountants, here is a set of people who understands, who moves on the same wavelength, who have seen the practical side of taxation policy, taxation laws and regulations, and then trying to apply. But I don't know what happened, where it happened, how it happened. I don't know. You people seem to have a phobia for customs and foreign trade. I don't know why. They are far, far, far less complicated than your income tax complications, especially now. I don't find any reason why chartered accountants should not step into this area. Sir, I guarantee your returns. I guarantee your returns. A man with 50 years experience is selling in this field, that I am guaranteeing your return. All that you keep aside the phobia. You just take an example, sir. Before GST, how many chartered accountants were, I'm sorry for saying this, how many of you were knowing the spelling of Customs Act and foreign trade? But now, thanks to GST, from 2017 onwards, you have slowly put your foot onto that. And today, who is dominating in the GST practicing, sir? Lawyers, consultants like us, we were all thrown out, flushed out. Because the trade wants you as their one package. Single window for a trade, or for the exporter or importer, whoever it is. For businessmen, chartered accountant is a single window. Neither a lawyer nor a consultant like us can ever aspire for that. Because that has been your line of practice, and that is how you are practicing. Very, very easy, sir. Very easy. Let me tell you, absolutely easy. 1/10 of the effort that you put in the income tax, if you put for foreign trade policy and customs, you reap 10 times more. Initially, there may be starting trouble, some hurdles, some roadblocks. All this is fine. We can overcome all that. There is no hurdle that cannot be overcome. If you cannot overcome a hurdle, it is not a hurdle at all. You call it a hurdle because you can overcome. Today you cannot overcome, but you can definitely overcome. So my humble request to all of you, though I am not seeing you, I cannot make a very passionate expression about this to you, but I am telling you with all the passion in my regard, all my force at my regard, I am telling you, please step into this area. We want people like you. This business needs people like you. The businessman needs people like you. Because accounts are passing through you, sir. And for God's sake, please stop doing the routine audit of checking the voucher and ticking the voucher. I'll give you an example. There is a bill of entry where an item has been imported, an expense has been booked as custom duty, 4,82,287.34. You're auditing that transaction. What are you auditing, sir? Your people in that office, they call for the bill of entry. They'll give a photostat copy which is not readable first. Then if this person whom you have sent is a smart fellow, he'll say, no, this is not possible. Please give me the original. I will not believe anything other than original. Very conservative person. He will get hold of the original. For what? To see that whether that 4,87,236.25 is correct as reflected in your books of accounts or voucher. He is referring the bill of entry only for that purpose. Please stop doing that. Go a step further. Probe. What is the rate of duty that you paid? 30%. Is that 30% true? Are there any exemptions available to you? Should you have paid 30%? Are there any concessions? Probe. Look at the have a look at the Customs Tariff Act, Customs Tariff, various notifications. Equip yourself for all these things. All these things cannot happen in a day. Certainly not. You have to sit many nights to come to that day. But doesn't matter. Your journey must begin today. The journey must begin today. The true audit is this, not checking the figure, but the propriety behind that figure. Was there a need for this company which I am auditing to pay this much of duty? You are telling me it is 30%, but I have come across a notification where it says you have an excess, your concession of 20%, provided your machinery or your raw materials or your goods are brought for this purpose, and you brought it for that purpose. Why have you not availed that exemption? Question. This is the type of work that you have to turn around, refine, so that you embrace silently the areas of customs, the areas of foreign trade policy also. I'm very glad to see that a large force of chartered accountants are being employed for GST professional work. I'm very glad, and they're doing it very well. I myself consult a couple of chartered accountants on some of my GST matters. I'm weak in GST, I must confess that. I specialize only in foreign trade and customs matters. Yes, I know GST, goods and service tax. It is what GST is. I know that it is goods and service tax, but nothing more than that I know. But there are people who don't know that also. So I consider myself to be more blessed than them. But that's not enough. When I want to have a deep practice into GST, it's not enough if I know this. I must know its nuances. And that study of nuances in an act or a rule, a chartered accountant, nobody is a match. You will be able to successfully, I'm sure. Therefore, I request all of you to enter into this field. And for that purpose, as I mentioned earlier, anytime you need my services, my help, my assistance is always complimentary to you for you and not for your clients. If for your client, you're asking an opinion, that will be a professional opinion. But for you, for your self-improvement, if you want to know something, for your enrichment of your own knowledge on a particular case, yes, it is always complimentary from me. And I am always passionate in say that my talk has been exhausted, and I know it is more than 1.5 hours. And before started talking, I knew that listening was more painful than talking. I knew that very well. Therefore, I tried to put the talk in such a manner that you will not feel so much frustrated as you would be otherwise with this type of subject being dealt. So I tried my best. I do not know how many of you have benefited out of this. So how many of you are awake now? I don't know. So to all those who are awake now, let me tell you, I'm closing this. We'll definitely have more opportunities if you wish. We can have more interactions. And I think I will leave the floor open for about 15-20 minutes for any general questions that can be raised. I'll be too glad to answer. So over to Mr. Subramaniam. Thank you, Subramaniam, once again.
Yeah. Yes, sir. It was actually a wonderful discussion all along, sir. We got to know about how the exact how was there a need for this policy and how it is there as on today. I have a question, sir. Can I ask you now?
Please.
Yeah. So how do you suggest, what is the starting point now for a chartered accountant who is into a little of practice of GST and he intends to start his journey towards customs and FTP practice? What is the starting point? How he has to take it from here, sir?
Starting point is your client only. Your client may see, it all depends on your stature of your client. If he is a person who has got dealings in foreign trade, naturally are only interested in such type of people. Now, if he is an exporter or an importer or a player in the foreign trade, I am sure he will definitely would have come across at least a couple of show cause notices or some demand letters or some inquiry letters from either the Department of Commerce, that is DGFT, or Customs. Now, customs operate almost on the same fashion like GST, like central excise. So the departmental working and all that is the same. So you start with your client and ask him whether, or for all you know, these show cause notices, they may not show you because they know that you are not dealing in this. And they know also that you abhor these two subjects. Therefore, they say, why trouble our chartered accountant, my auditor? I will not trouble him. He may not be interested. I will go to somebody else. And even you yourself can find out from their your audit whether any such cases are pending or anything is there. And you discuss more frequently with your client if you have time as to see what are his problems that he's facing. I think that is the best thing to do. You ask him whether you have any problems in your clearance, imports, exports, documentation. It might sound a bit bizarre to the fresheners now, but then you can't help. You have to take a jump. And in the water, you have to manage. I think that's the best way to do. Then slowly you get into it.
Yes, sir. Got the answer. Yes. Anyone has any questions, they can click the symbol on raise hand. We will unmute and they can directly have a
Subramaniam, one question. There is one question.
Yeah.
Hi, sir. Whether SEZ unit can apply for Star Export House certificate?
Oh, yes, they can.
Okay. So there is one more question. When is new FTP is coming? Going to introduce?
They announced that they are going to introduce in end March, that is commencing from 1st April 2022.
2022.
But people say policy is ready, it is only to be announced. but the policies keep changing day by day. So many things have to be incorporated. Now this whole of chapter 3 will have to go away. There is no chapter 3 now. Almost all things have gone away. So now new thing, a RODUP has come, so that may not fit into FTP. So I think they are ready for all that, and I think 31st March is a fairly a good time to wait till.
Sir, this is Soumya. I
Yeah.
have a question. Sir,
Yes.
now with the conflict with the WTO, so many schemes are going to go away. And even the benefits mostly for SEZ is gone, the income tax benefit is gone. So many benefits are going. So how you think, sir, government is going to support the exporters going forward? ROTEP also doesn't seem to be that lucrative, like before MEIS is gone.
Yeah.
So it's a very gruesome situation, actually.
Export incentives, you said it is going to go, but it is not going to go, it has gone.
Has gone, yeah, exactly.
Your DPP has gone, all those small jigsaw puzzles like VKGY, FMS, FPS, all these things have gone, and one master module MEIS has come, and even that has now gone.
Sir, EPCG is going to go away is what I heard. He definitely.
We don't know. EPCG and advanced license, we don't know. We don't know. These are all speculations, and I would not like to indulge in speculation. But as of today, EPCG is a good scheme. People are finding it worthwhile. Advanced license is a good scheme. EOU is a good scheme. SEZ is a good scheme. There's a new scheme with a new attire. The old bonded warehouse, now it is commonly known as a nickname MOOR, MOOWR, manufacturing and other operations in warehouse. This is a new version of the inbound manufacture. So this is also picking up. But there, the problem is you can import materials required for domestic market also, but then when you clear it, you have to pay interest on the duty foregone. Whereas in EOU, you don't have to pay interest. So this is
under mover, sir.
Under mover, you have to pay interest. Interest is payable.
Or from the time you import and till you clear it in the TTA. When you clear it,
and even second hand and capital goods, when you want to take it out for domestic purposes, take it out the machine. Even
depreciation
after 10
is not
years,
allowed.
No, depreciation is not allowed, and interest will have to be paid on the duty foregone.
Oh, that is the lap side of the scheme.
Yeah. So those things will have to be carefully studied, and see, these are some of the areas. More is one area where chartered accountants can straight away start tabulating the differences between EOU, MOOR, and advanced authorization and EPC. Well, that's worth tabulating, and you people are good in tabulating.
Correct, sir. But the only problem with MOOR, sir, is that each time you will have to take an approval. Whenever you are bringing an item.
Not approval. You have to. Not approval. You have to only intimate them.
Intimate only. Okay.
Only intimation, not approval. Intimation they would expect, because they would like to know what and when you're bringing the materials, so that they want to keep a watch. If at all they want to inspect, they will inspect. Otherwise, they will not inspect. It's only intimation and not an approval.
And what about bond, sir, for each of the items? Each time do we have to give a bond, or it's a general bond?
No. It's a general bond. Once in a year you give, not once in a year. At the time of setting up the warehouse, you estimate the maximum quantity of raw materials and duty-free goods that will be available in your store, and then calculate the duty on that and give a bond on that.
Okay, sir. Thank you so much.
Yeah. Anybody else?
Hema madam, I think one more person has raised the hand. Can you unmute them?
Actually, I have given the permission. He has to unmute over there. He has to accept.
Okay. The person who has given the name as AB, can you please unmute and ask your question?
I have given the permission, sir.
Yeah.
Unmute it.
How many have attended, Subramaniam?
Sir, around 35 were part of this program, sir.
Okay, okay.
Any other questions? Okay.
I think no.
Well, yeah, I think it was a wonderful program. I would like to first thank you for having not stopped anywhere right from the beginning. It's been almost 2 years, and the pitch at which you started is the same pitch at which you are right now speaking. We should take that good, or we should be able to inculcate that kind of a habit, actually speaking. So I'd like to hand.
That's because of the age. I'm only 78.
True, sir. So I'd like to hand it over to to Ms. Hema to convey the vote of thanks. And
what have you done now? Same thing you did.
yes,
You
sir.
already conveyed the vote of thanks, no? Okay, carry on. Jokes
Thank
in
you.
between.
Thank you, Subramanian sir. Good evening, everyone. I am honored to have been given the opportunity to present the vote of thanks today. I would like to thank Sri Menon sir for explaining the concept in such an extraordinary way. And I like to thank our president at Karnataka State Chartered Accountant Association, CA Chandan Kumar Egde, and CA Subramanya BL, chairman of Indirect Tax Committee. And I also like to acknowledge the efforts of CA Amaresh, the member of Indirect Tax Committee of Karnataka State Chartered Accountant Association, for moderating today's Q&A session. So finally, I would like to thank all the attendees for being a part of today's webinar. So before I conclude, I would like to bring to the notice of the attendees that KSCAA has planned for many other sessions for the future, and all such details are available on our portal. Our website is www.kscaa.com. And for the participants, shall be able to refer today's presentation at the KSCAA website. So for your future references. So I would like to thank everyone once again for making today's webinar a grand success. Thank you all, and happy and safe weekend. Thank you, Menon sir.
Thank you.
Thank you.